Good afternoon, everybody. My name is Drew Demon, and I'm the Devil Stockbroker. For this video, I'm going to be covering AMC Entertainment Holdings. Currently looking at some of the technical patterns on the charts, but that's not the most interesting part about it. But we'll get the nitty-gritty out of the way before we go into some of the finer details. Right now, AMC has been in a pattern of consolidation, establishing higher lows for the last about 3 months, I would say, since the middle of May of this year, and is currently trading at around $14.47. As you can see, that since the ticker had squeezed up to about $72 in June of last year, we've been consolidating down in this descending triangle pattern, more like for the last year. AMC's been trading down in this narrowing channel, slowly getting closer and closer to $10 before it bounced right below at just above $9.50 and has since recovered at least some of its position, now consolidating just below this heavy area of resistance at $15. We broke out above it just briefly in early July, and then we're pushed back down below that area of support. Now that we have established this new level of support at $14 and seem to be testing that low and holding that support, the next step for AMC is to break above that $15 in order to retest the $16 level one more time. Looking at a handful of the technical indicators on the RSI, we have the RSI mostly going in a bullish direction, just trending towards the upside and showing that AMC bounced off support at exactly the RSI signal line. That is the moving average for the RSI. The STC momentum indicator, which is loosely based on the MACD, is currently red, so we are in a pattern of consolidation as it would appear. And the MACD is showing very much the same, with the MACD crossing down just a few days ago on the daily chart and seems to be moving back towards a area of consolidation. As AMC's price moves up, the MACD is slowly coming back down towards the midline. Another indicator that I like to refer to just occasionally is the on-balance volume. That's OBV. This measures volume as buying or selling pressure on the stock and tracks the balance, air quote, about every single day. Currently, I'm looking at AMC on the 2-hour chart, which is showing that the OBV, after it moved up from early May up till the top of $72 in June, the OBV has more or less stayed pretty much even. However, when we go back down to the OBV here in AMC's early on squeeze, the OBV had actually created more of a wedge pattern where it had suddenly broken out above and then signaled the next move to the upside after roughly May the 25th, which you may remember I called out early on long before I became the Devil Stockbroker. What I'm currently observing in the OBV is that AMC is still continuing to trade with the OBV hitting a ceiling more or less right here at around 1.4 billion shares on balance, according to the OBV. Now, every time that we have tested this area, the price has gotten slapped down, and I've been theorizing that this is the ceiling that must be broken through in order to see AMC make another challenge to the upside and potentially squeeze shorts out of their positions. Looking at the moving averages, I'm going to be using exponential moving averages for this particular technical analysis. What we saw the last time that AMC's EMAs started to consolidate towards each other after coming up to a downtrend is that they hit resistance on the 200 period average. That's this red line moving along the chart here, before it finally had a breakout, and basically no resistance could stop the price from moving up to the upside once it had broken through. Here more recently, we're getting something very similar in that all of the moving averages have been consolidating towards each other, and the price has been bouncing around, ranging quite volatilely, but still stuck in this narrow band of trading where it's gotten tighter and tighter and tighter. And now for the first time, we've had this clear breakout where all of the moving averages have spread out from each other and are trading well above trend, above the 200 period average. Now, we did just break down below this average and we are consolidating below it, but we have established a clear area of support here at $14.50. In my opinion, this is actually the ideal scenario for AMC because, for the most part, AMC's best performance came from slow grinds upward, moving slowly over time to test resistances, breaking through, and establishing consistent support every time that it made a move to the upside. Every time that it instead made this massive volatile move to the upside, it got smashed down and closed far lower, and then had to regain all of that ground over a lengthy period of time, allowing market makers and brokers to make money from selling options out of the money. The critical area for AMC is going to be for it to continue along this slope here, this trend line of higher lows, and for the price to break out above this descending trend line. Once it's able to break above and establish a clear area of support, it will be free to move back up to the upside after a brief period of consolidation over the $15 range. There's no telling exactly how long or little this would actually take, given that we're coming up on earnings in the first week of August. I'm pretty bullish going into this first earnings week for Q2 of AMC because the summer season is one of the best movie-going seasons, and it's where the box office has had its best numbers, historically speaking, and AMC's already posted numerous PR statements indicating how well it's performed at concessions and box offices, although we are still waiting, of course, for the hard numbers on earnings. Very quickly, we're going to come over to Ortex and take a look at the short data for AMC. As before, utilization still maxed out at 100%, just like it's been for the last several months. And the short interest estimate for Ortex has been moving up. We've now hit a new recent high of 101 million shares estimated to be sold short on AMC. That puts the estimated short interest at approximately 19.6% and the free float on loan at approximately 28%. Days to cover is still sitting at about 3.4 on the high side, so that's actually quite a high number for the amount of shares that are currently sold short on AMC for a stock ticker that's got such a large market cap and such a large float. That would take quite a lot of time and quite a lot of price action to actually evaporate all of those short positions if shorts were forced to cover them in a short time. More pressing is the cost to borrow, which remains high and is still consolidating here at approximately about 9.71. That cost to borrow would be annualized 9.5% of the shorts' total cost of their position just to maintain it for 365 days, give or take a few dollars per share. But above all other pieces of data, the one that is the most interesting to me is this massive spike in failures to deliver, which hit a high of 9.7 million. This is not the highest that AMC's failures to deliver have ever been. That number was actually January, back when the failures to deliver was 27.69 million, and that was at a time when AMC's float was closer to 250 million shares outstanding. Much to my surprise, AMC still remains off of the threshold list, so it's unlikely that we'll see AMC squeeze until the stock has been on the threshold list for a significant period of time. Reason being is that the threshold list determines when market makers and broker dealers are at risk of being forced to close positions that are sold short and account for all of the late settlement that's taken place over the past 35 trading days. However, one thing that we can point to is that the security lending volume has been coming down from all-time highs, indicating that either interest or the ability for shorts to continue shuffling back and forth shares that have been borrowed is becoming less over time. And this is the same activity that we saw where AMC short lending volume hit a massive high around the middle of May in 2021 and slowly trickled downward to a low point just before the price squeezed massively, indicating that shorts became illiquid and that borrowing shares became extremely difficult just prior to the big move upward. However, at that time, AMC was most certainly qualifying for the threshold list, with failures to deliver spiking up massively at that time. We are seeing some of that action right now, but still AMC is not currently on the threshold list. The one thing that I would point out is that AMC didn't end up on the threshold list in June until after the price had moved up to $72. So I could be wrong here. This is just my opinion, but for the most part, the squeezes I've seen usually take place while the stock is on the threshold securities list. The point that I'm making here is that I look to AMC to continue to make slow moves upward increasing the price and thereby increasing the pressure on shorts. My emphasis will continue to be on building a base position of shares supplemented by long expiring call contracts that are close to or in the money, i.e., leaps. I would like to briefly review a concept that I visited on AMC and multiple other squeeze plays that I've covered. That being the short exempts that are reported by FINRA. Short exempts, if you're hearing this term for the first time, is just a short which has been sold exempt by a broker dealer or a market maker. Short exempts are exempt from the locate and the uptick rule, and they are supposed to be a special use case, but in actuality tend to be used for abusive short selling on the part of broker dealers and market makers, who are the only entities which are permitted to use them. The advantage of a short exempt is that the broker dealer does not have to locate the share before they sell the share short, in which case that means that it is a naked short for the life of that short until they locate that share. The time limit for this is 6 trading days. What we've observed in AMC, and this is data taken from May of 2021, shows that short exempts became a lot more prevalent in the stock while it was trading each trading day as it was trending upwards, showing that the moving averages of AMC were slowly pushing to the upside, up from $8 all the way up to $12.50 and then $13.95 and $14 on successive trading days, particularly after a massive spike in short exempt volume. What we can treat this as is that short exempts, which are typically used in order to take the other side of a buy order, usually by retail investors, market makers will use the short exempt in order to defer settlement for the trading. To put it more simply, when you make a buy transaction, the market maker says, I'll get that share to you later, and then sells a short exempt, marks your position, and then waits to find a share at a cheaper price so that they can deliver it to you on a discount for themselves, thereby keeping the difference and profiting from it. In this particular instance, the euphoric buying on AMC was so massive at the time that what actually ended up happening was the price continued going up despite market maker and broker dealers' best efforts to push the price down using short exempts in order to defer delivery. What I suspect this was a combination of gamma squeeze with a lot of call positions that were slowly going in the money from out of the money, a massive amount of buying of next week expiring call options that were even further out of the money, which subsequently also went in the money later on, forcing market makers to delta hedge those positions by buying shares. And it essentially became a giant boulder rolling down the mountain, which they could not stop it at that point. What really threw it over the edge, I feel, or at least signaled that they were losing control, was that short exempts were massive. This was a huge number, showing that 2% of every share sold short was actually a short exempt, and that short exempts themselves made up about 1.2% of the total trading volume on these two particular days. And it continued to remain high up until about May 19th and 20th, when they were trying very, very, very hard to suppress the price where the short exempt ratio, that's short exempt volume divided by short volume, reached a massive 4.2% back to back. And still, the price moved against them only 2 days later because retail refused to step away and they refused to sell. Instead, we kept buying more, and that pushed up the price. And then, well, you know what happened after that. So why do I bring up the short exempts? Well, the reason is that we have similar conditions going on now to what we had going on in April and May, where short exempts were being used, but the price continued to consolidate sideways or go up slowly over time, and the market makers weren't able to make a profit, pushing the price back down. What's more is we have a catalyst coming in the form of earnings, which is only a week away. So we've got something big coming, and we're at a major slope of resistance that's been pushing us down and keeping us contained in this lower area below $18 for a significant period of time, over 3 months. What we can do is we can refer to the short exempts, which are currently being published right now by FINRA, to see, are the market makers still in control, or are they struggling right now? Let's go take a look. Well, shit, that looks like a lot of loss of control to me. The short exempt ratio for the last month, the entire month, has been in excess of 3% on most days. reaching as high as 6.2% on the 18th of July. Every day that the price moves up higher, it becomes more and more difficult for the market makers to push it back down. What is really putting the pressure on is buying shares and buying it from the lit exchanges, because the market makers don't control that volume. The only volume that the market makers control is the volume that's being directed to them by your broker, who is using payment for order flow to send your orders to the market maker, which they can use internalizers and dark pools to settle the shares without exposing the price action to the national best bid and offer, also known as the NBBO. We're still waiting on the number from today, but right now, just looking at the trend for AMC, seeing that the price is continuously consolidating at this area of significant resistance, coiling as it has been doing for this significant period of time, I'm thinking that AMC may be getting ready to make another push to the upside. And if earnings is at all a surprise to AMC, this could be enough of a upset to trigger a loss of control for the market makers. And once again, we have the possibility of that boulder rolling down the hill scenario. If they lose control of the stock, once it gets out of their hands, there's no stopping it. Why is there no stopping it once it gets out of their hands? Well, because if you look at this current chart that I have up, this is actually a gamma ramp chart that we've developed for our Scourge bot at Hell's Trading Floor. What this chart tells you is the percentage of the float that would be in the money, or the amount of shares that would actually need to be delivered versus the float at a given strike price. At $20, if AMC's price were able to reach that, would cause more than 5.5% of the total stock outstanding shares to be in the money. If you do the math on that, that's about 28.87 million shares that needs to be purchased by market makers, assuming that those calls were sold naked and they don't actually have the shares on hand to deliver if they were asked. And while naked calls are not the same thing as naked shorts, they do represent an unhedged risk on the part of market makers who sold those calls without actually having shares available and in their inventory if they were actually to go in the money and they needed to deliver those to whoever purchased the call contract. This represents a possibility for the price to completely run out of control, because once it reaches that price, it's too late. The market maker can't hedge in the past. They have to start hedging right away, and the only way to do that is to start buying those shares. And while that is a remote possibility, I can't help but notice that there's quite a lot of popular at-the-money options that are coming, that are getting bought up by retail and institutions right now, with the current open interest sitting at around 4,760 for the August $15 calls, and the August 5th $14.50 calls sitting at an open interest of 3,284 contracts. It's a small piece of the pie, but I'm noticing that a lot more euphoria is hitting AMC recently, which indicates some bullish sentiment. I don't advocate for buying calls that are expiring every single Friday. I consider that to be extremely risky and, a bit reckless, but it's important to pay attention to the numbers, because that is the exact same sort of event that preceded what happened with AMC back in May and June of 2021. Massive buying of near expiring at the money call contracts forced market makers to hedge their bets, purchase shares, and inevitably drove the price up well out of their control. Although I'm optimistic for AMC's earnings, typically what we see is the stock will start to head up leading into it and then drop down. If that happens, I won't be too upset, but I'll instead anticipate the move and hedge myself accordingly. But I will be looking forward to seeing how AMC performs going on into the future, maintaining this ascending trend line and bouncing off of these supporting lines, establishing higher lows every single week. And if that trend continues and AMC does indeed challenge its upper resistances and is able to break out from its current containment that it's been sitting in for the last 3 months, I look forward to seeing what it can do in the months to follow. As always, remember that this is not financial advice and I'm not a financial advisor. I'm just an amateur investor who's looking to find some opportunity wherever it can be found. If you like this video and you like this type of content, be sure to give the video a like, subscribe if you aren't a member already, and consider joining our Discord at discord.gg/hellstradingfloor if you want to get access to some of the resources and educational content that we provide privately for our community, and also just to be a part of the fun while we trade and learn every single day. Thank you so much for watching. I'll look forward to seeing you Monday at the bell. Until then, have a hell of a weekend.